Okay, here we go. Yes, sirree. Hey there, it's Kurt Nilsen with Sunrise Mortgage Group in Oregon City, Oregon. This is part 4 in a series of mini classes covering all the steps in the home buying process. Over a number of weeks, I'm going to go step by step and walk you through the home buying process from A to Z. My goal is to cover the top things that you need to know and questions that we mortgage brokers and my realtor friends get asked every day about the home buying process. Last week in part 3 of the series, we talked about how critical it is to find a great real estate broker, what your real estate broker does for you, and how to find a great real estate broker. If you haven't watched the first 3 parts, I encourage you to do so. All you need to do is scan down to the bottom of this page and start at part 1. Today in part 4, we're going to assume that you have found the home that you want to purchase. So what happens now? Well, in part 2, I had discussed the home loan pre-approval and how a pre-approval really means that you're officially approved for a certain monthly payment, not necessarily an exact purchase price due to the differences in the annual property taxes from one house to another. I always encouraged my pre-approved clients to call me so I can double-check the numbers before they go look at a house so I can make sure they're within their pre-approved dollar amount range. So if you haven't called your mortgage person yet, now's a good time to do so before you make your offer to purchase so they can just double check and make sure that you'll be within your pre-approved range and, equally important, that you'll be okay with your new monthly payment. The reason I'm so adamant about people calling their mortgage professional before they make an offer on a house is that there's not many things worse than getting you and the family excited about a home only to find out that the numbers don't jive with your pre-approved amount or that the new monthly payment on your new home is not what you expected. Okay, you've checked with your mortgage person, and now that we know that the numbers look good, now it's time to get with your real estate broker to discuss making your offer. By now, you very likely build a lot of rapport with your real estate broker. You trust them and their experience to guide you through the offer, also known as the purchase contract process. You know, you are the ultimate decision maker regarding how much you want to offer as far as the purchase price, but your real estate broker will be able to make suggestions and guide you regarding the suggested dollar amount you offer the seller. Obviously, if you want to buy this house, you want the best chance of getting your offer accepted, and there are many variables as far as what price you offer. The variables include the state of the current market, how long the home has been on the market, the loan terms being offered on this particular house, the condition of the home, and whether or not homes on average are selling below the home's listed price or even above the listed price. You can ask your real estate broker to show you a printout that shows the average sales price to listed price ratio to give you an idea. Don't always assume that you can offer low and negotiate. Again, it's your call, but please listen to your real estate broker's advice. In the last 7 or 8 years, for example, I've seen cycles where homes were selling for an average of 3% less than the seller's asking price, to the other extremes of homes selling for an average of 1 to 2% over the asking price. Yes, you heard that right. In a competitive market, homes often sell for over the listed price. I don't mean to sound like a broken record, but please listen to and trust your real estate broker's advice. Once you and your broker have discussed and that you've decided on a price to offer, your real estate broker will begin writing up the offer or purchase agreement. Your broker will explain the contract to you, but in a nutshell, the offer contains the price you are offering, what type of loan you're approved for, any inspections that you wish to have, the amount of earnest money you'll deposit, more on that in a minute, and an estimated closing date. The closing date means when you actually get the keys to your new home, which is typically between 35 and 45 days from when your offer is accepted, by the way. Once your broker has filled out and explained the offer will be presented to the seller along with a pre-approval letter given to your real estate broker by your mortgage professional. It is written into the purchase agreement, but the seller is usually given between 1 and 3 days to decide how they want to respond to your offer. Speaking of the seller responding to your offer, the seller has 3 options. Number 1, they can accept your offer as originally written. Number 2, they can make a counteroffer. A counteroffer could be related to the price, earnest money, close date, or essentially any other aspect of the contract. Number 3, they could reject your offer. Rejected offers are rare unless the offer was so low that it perhaps offended the sellers. If they accept your offer as is, yahoo! Your broker will forward the purchase agreement to your mortgage person and you'll move forward from there. If the seller counters your offer, then it's up to you to decide whether or not you accept the terms that they countered on or not. If not, you can counter back to the seller, and this can go back and forth a little sometimes until both parties are happy. In general, though, this is typically not an unpleasant process when you have a reasonable seller that wants to sell and a reasonable buyer that's making an offer congruent with the current market conditions. Once you and the seller come to an agreement on the price and terms, you'll be asked to write a check for the earnest money. The best way to describe earnest money is that it's good faith money that you're depositing to show the seller you're serious about buying their home. The earnest money amount you'll be asked for is negotiable, but it's very common for the earnest money to be 1% or more of the purchase price. Sometimes more, sometimes less. Your real estate broker will advise you on that. The earnest money is not held by the seller or the real estate broker. It's held in a neutral third-party account by the title insurance or escrow company. This is where you'll sign the final papers. At the end or close of your transaction, the earnest money will typically be credited to the down payment and or closing costs, and it is possible to get your earnest money refunded if you're using a no down payment loan. The only way you can lose your earnest money is if for some reason you change your mind and decide to back out of the deal, in which case the seller would typically receive your earnest money for their trouble. For your protection, just so you know, it's standard language in the purchase agreement that you will be refunded the earnest money if for some reason the loan doesn't go through. But this is very rare when you've been pre-approved. So that's it for our Making an Offer to Purchase segment of the Smart Oregon Homebuyer series. This is a very exciting part of the home buying process, so listen to your real estate broker's advice on best practices to get your offer accepted, and you'll have a very good chance of getting your offer accepted and being a major step closer to moving into your new home. Thanks a lot for tuning in.